Hey everybody, it's Chip Harris again. Just wanted to get back with you about real estate and about the economy as I see it and as I read about it. And I want to start out by saying that the video on my channel that I previously just uploaded is a live performance by KC and the Sunshine Band. And the reason I put that on there, I went to that concert the other day. It was a great concert. And the reason I say that is because it's KC and the Sunshine Band. And in my opinion, despite what you keep reading about and hearing about, the economy continues to hum along. There's a lot of bright spots and sunshine in the economy. And one of the primary ones that sticks out in my mind, we just got the jobs numbers back for new jobs last month. And my gosh, over 500,000 new jobs created here in the early part of the year of 2023. Fantastic jobs numbers, actually lowered the unemployment rate down to 3.4% unemployment, which again, as I've said in previous videos, is pretty much full employment. If people want a job, they can get a job or have a job. And so that being said, the jobs numbers are incredibly positive. Now, the naysayers will say, and I agree with them, that positive job numbers does not bode well for interest rates. The Fed this week just increased rates by 0.25%, which was expected, and that will probably continue at least 1 to 2 more times in the next 2 meetings, in my opinion. However, rates from a mortgage perspective have been dropping a little bit closer to the sixes, low sixes for 30-year fixed rate mortgages with really good credit. So between 6 and 7% for most folks. So, mortgage rates have been looking pretty good. That may change and ebb and flow over the next couple of months. Certainly may change if interest rates increase again at the next meeting, which I think they will. But, just like the name KC and the Sunshine Band, there's a lot of sunlight out there and a lot of bright things, a lot of sunshine, and I love it because the job numbers are incredible. Real estate itself, at least in my area of North Carolina, valuations are hanging on. Prices have been becoming negotiable with sellers and buyers, which is good for buyers, but not tremendously. I mean, property values are maintaining in our area based on the statistics I'm seeing, and real estate activity in the new year is picking up and here gaining momentum into the spring season. So from a real estate perspective, if you're a homeowner, I think you're in great shape. If you're a buyer, you're also in pretty good shape because there is some negotiating going on here and some flexibility in sellers in a lot of cases. But there's still a very anemically low inventory problem, and that is keeping prices and home values up and keeping buyers paying a little bit higher for homes than they would have 2 or 3 years ago, or a good little bit higher than 2 or 3 years ago. And with interest rates also being higher than they were a year ago and before, affordability is still a determining factor and a negative factor in a lot of cases, eliminating, unfortunately, a lot of buyers from the market right now because of unaffordability with higher priced homes and higher interest rates mean higher payments that they may not be able to afford or want to afford at this time. But the folks who have cash or the folks who are financing and need to move and just have to bite the bullet with the higher rate right now, just keep in mind that, everybody always says you date the rate, but you marry the home. And I really like that saying because you can always refinance your rate later. But if your home is where your heart is and you fall in love with a house and you have the means to purchase it and need to move and want to move, it's not a terrible time to do that right now as a buyer. So keep that in mind. So recap, great job numbers, pretty decently strong economy numbers overall. Housing market kind of catching up a little bit and gaining momentum into the spring of 2023. And then rates we got to keep an eye on, but at least the Fed has kind of slowed down with the 75 basis point, 50 basis point increases, and now have kind of transitioned to the lower 0.25 point increases, which is historically a little more normal. And again, that may happen twice, three more times before they decide that they have finished their job in terms of fighting inflation, inflationary pressures. But as long as inflation persists over their 2% target, they're going to continue to try to work towards fighting that battle until the economy slows to such a degree that they have to start then lowering rates. And I think and predict, and there are others that I've read that think and predict, that by the end of this year, towards the beginning of next year, the Fed may end up easing rates. And that would be great for the housing market, for the mortgage market, and for any short-term borrowers out there that look to buy for their businesses or personally through their credit cards or car loans or whatever. So just keep on waiting. It'll hopefully go down at some point in time, but right now we're going to stick with some higher rates. But the sunshine is housing market's looking a little better than it was last year, in my opinion. And number two, mortgage rates have come down slightly over the last month or so. So let's keep the momentum positive, keep it going. And until next time, I'll talk to you later.